You know that feeling when you're standing on the beach and the water pulls way back
Yeah.
just before a big wave hits.
Yeah, that quiet anticipation.
That's sort of the vibe I'm getting from the crypto space right now.
Yeah.
Kind of stillness.
That's a really good way to put it.
Yeah.
And look, if you've been through a crypto bull run before, that feeling, it's probably familiar.
Definitely.
But for anyone new listening, imagine prices across the crypto market just climbing rapidly, continuously, almost for weeks, maybe months.
Yeah, it pulls in so much attention. New investors, new projects everywhere.
And suddenly everyone is an expert, right? You get these meme coin surges like Dogecoin, celebrities tweeting.
Oh, yeah. Your whole feed is just top crypto picks.
Exactly.
Linking back to, what, 2021, that
Yeah.
last run, it was just wild.
It really was.
Couldn't escape it. Elon Musk and Dogecoin, obviously.
To the moon.
Right. And those NFT profile pictures,
Yeah.
the cartoon apes and things,
Yeah.
people were spending serious money.
Unbelievable amounts. And then Snoop Dogg, Paris Hilton, even McDonald's was doing something with NFTs, wasn't it?
Yeah. And DeFi, decentralized finance, that was the big buzzword. Huge potential yields.
And look, some people made truly life-changing money. We have to acknowledge that.
Absolutely.
But the flip side is also true. A lot of people got caught up in the hype, maybe chased things they didn't understand, and, well, they lost money. Sometimes a lot.
Which is exactly why we're doing this. The idea now, looking at these potential early signs, is to be informed, strategic, not just, swept away.
Precisely. So this deep dive, it's not about predicting the future. No crystal balls here.
Yeah.
It's about looking closely at the signals, the patterns, the source material highlights, and trying to understand if that next big wave, that next bull run, might actually be starting to form.
So let's get into it. What actually kicks off one of these bull runs? It's not just random hype, right? Although that helps.
No, definitely not just hype, though. Hype adds a lot of fuel later on. Usually there are some more fundamental drivers, things we can point to.
Okay. And our source highlights a few key catalysts. First up, the Bitcoin halving. Can you break that down for us? Why is it such a big deal?
Sure. So the halving is built right into Bitcoin's code. It happens roughly every 4 years. And what it does is it cuts the reward miners get for processing transactions in half.
So less new Bitcoin being created.
Exactly. It slows down the rate of new supply entering the market. So you have this programmed reduction in supply, potentially meeting steady or even growing demand. Basic economics says that should push prices up.
Makes sense. Supply and demand.
Yeah. Although it's worth mentioning, with big institutions in the game now, maybe the impact isn't as immediate or explosive as it used to be. Their trading might smooth things out a bit.
Interesting point. And the last halving was when?
That was April 2024. Just happened.
Yeah.
And, the source has that great line, TikTok, because historically, the big bull run tends to follow maybe 6 to 18 months after the halving.
So we're potentially in that window now. TikTok.
Potentially. It's one key piece.
All right. So a potential supply crunch is one factor. What else usually plays a role in these big market moves?
Well, the bigger picture matters, too. The global economy.
How so?
When things are looking more stable, maybe improving, and especially when central banks start thinking about lowering interest rates.
Right. Makes borrowing cheaper.
Exactly. Investors generally feel more comfortable taking on risk, and crypto is definitely seen as a risk-on asset. So lower rates, more stable economy. That tends to be good for crypto.
And where are we on that front now, according to the source?
The feeling is we're kind of moving into that sort of environment, maybe slowly, not a sudden floodgate opening, but conditions are gradually becoming more favorable.
Okay, so having reducing supply, maybe a better economic backdrop emerging. What's the third big driver the source mentions?
This one's crucial. New tech and new narratives. New stories.
The hype factor, but rooted in something tangible.
Sort of, yeah. Every big cycle needs something new to get people excited to draw in fresh capital. Think back.
2017, ICOs, right? Initial coin offerings.
Exactly. Then 2020, it was all about DeFi, yield farming.
And 2021 was NFTs taking over the world.
Right. So the question is, what's the next big story?
And what does the source suggest? What are the potential narratives now?
Well, it points to a few interesting areas. AI meeting crypto, AI X crypto.
Okay, that's a big one.
Definitely. Then there's decentralized physical infrastructure networks.
Right, like decentralized file storage or things like that.
Yeah, or wireless networks, compute power. Then tokenizing real-world assets. Imagine owning, like, A fraction of an office building represented by a token.
Okay, that could be huge.
And even things like on-chain social networks, new ways to interact online built on crypto rails. These things bring new energy, new interest, and importantly, new investment.
Got it. So those are the big underlying forces. But what about things we can see now? Observable signs that maybe things are starting to heat up. The source listed 7 early signals.
Yes, these are the indicators to keep an eye on. Number one, developer activity is picking up.
More people building stuff.
Exactly. You look at things like GitHub commits, code updates, the number of active developers working on crypto projects. If that's increasing, it's a healthy sign. It means people are building for the future.
Makes sense. Builders got to build. What's signal number 2?
Money coming back to crypto VCs, venture capitalists.
Ah, the smart money returning.
Well, the risk capital anyway. When VCs start putting more money into new crypto startups again, it shows they're getting optimistic about growth potential. After the recent downturn, seeing that funding flow back is significant.
Right. Are they focusing on any particular areas right now, these VCs?
That's a good question. The source doesn't detail VC specifics, but generally, renewed interest itself is the signal. They're betting on something working out.
Okay, so more building, more investment. Signal 3.
The emergence of new social layers. The source specifically mentions things like friend.tech style apps.
What are those exactly?
They're experimenting with social interactions built directly on the blockchain, often involving tokens or ways to monetize your social presence on-chain. It shows renewed interest in crypto beyond just finance the community aspect.
Interesting. So new ways to connect using the tech. What's the 4th signal?
Growth of activity on layer 2s, like Base and Blast. These platforms help Ethereum handle more transactions faster and cheaper.
Scaling solutions.
Exactly. And the source mentions on-chain experiments happening there. People are actually using these networks, trying out new apps, new DeFi protocols. It signals real demand.
Okay, so activity on these faster, cheaper chains is increasing. That makes sense. Number 5.
This one's interesting. Mainstream brands quietly re-entering Web3.
Quietly. Not like the big NFT splashes from last time.
Seems not. More like subtle experiments, maybe using blockchain for loyalty programs or supply chain tracking, or exploring practical uses for tokens behind the scenes. Less hype, maybe more utility-focused.
So established companies are still exploring, but maybe more thoughtfully this time.
That seems to be the suggestion. It points towards longer-term integration rather than just marketing stunts.
Okay. What's signal number 6?
A classic one. Google searches for crypto starting to gradually increase.
Ah, mainstream curiosity picking up again.
Exactly. It's not booming yet, but that slow, steady rise shows more regular people are starting to pay attention again, ask questions. It's a good barometer of public interest.
And the final signal? Number 7.
Just a general rise in overall on-chain activity. This is broader. It means more new wallets being created, more stable coins moving on to exchanges.
People getting ready to potentially trade or invest.
That's the implication. More activity across the board suggests the ecosystem is waking up.
Wow. So you take those 7 things together? More building, VC money returning, new social apps, activity on layer 2s, quiet brand involvement, rising search interest, and just general on-chain bustle.
Right. It starts to paint a picture. And the source uses that phrase, there are no fireworks yet.
But the matchstick is in hand.
Yeah.
Yeah, I like that. Feels expectant.
It does. The conditions seem to be aligning, but maybe the big ignition hasn't happened. Which leads to the really crucial part for you, the listener.
Right. How do you approach this potential shift? What do you do with this information?
Exactly. It's not just about watching prices. The source asks some really good questions you should ask yourself. Like, are you just trying to flip coins for a quick profit?
Yeah.
Or are you genuinely interested in the tech and the trends?
Are you thinking purely as an investor?
Yeah.
Or could you maybe create something in this space, build something?
Yeah. And are you just going to repeat what everyone else is saying? Or can you develop and share your own perspective, your own research?
Those are really important distinctions. They shape how you'd engage with a potential bull run.
Completely. And based on how you answer those, the source suggests some actual proactive steps you could take now before things potentially get crazy again.
Okay, so what should people be doing if they want to be prepared, not just reactive?
Well, a few ideas. One, try creating content on-chain. There are platforms emerging for that. Share your thoughts directly on the blockchain.
Interesting.
2, maybe start a blog about Web3. Document what you're learning. Share your insights. 3, Really dive deep into tokenomics. Understand how the economics of these projects actually work. Don't just buy based on hype.
Crucial.
4, get involved early in communities you find interesting. Join the Discord, talk to people, understand the project from the inside.
Be part of it, not just watching it.
Exactly. And finally, if you do invest, focus on making smart, informed bets, not just, YOLOing into the latest meme coin.
Right. The overall message seems to be, don't wait for the CNN headlines.
Pretty much. By the time it's mainstream news, the biggest opportunities might have already passed. It's about proactive learning and strategic positioning now.
Okay, so let's just quickly recap the main points. We've got this potential convergence, right? The Bitcoin having supply effect, possibly improving economic conditions, and these new exciting tech narratives bubbling up.
Yeah, like AIX crypto, DAPIN, real-world assets, on-chain social.
And then we have those 7 early signals suggesting things might be brewing. Developer activity, VC funding, new social apps, layer 2 growth, quiet brand entry, rising searches, and general on-chain metrics.
And the key takeaway for you listening is the importance of shifting your mindset. It's about preparation, understanding, making informed choices, not just chasing the pump.
So here's a final thought for you to chew on. We mentioned those emerging narratives, AI and crypto, DePIN, tokenized assets, on-chain social. Which one of those actually sparks your interest the most? Forget the hype for a second. Which one makes you genuinely curious?
And maybe, just maybe, what's one small thing you could do today to learn a bit more about that specific area? Read an article, find a relevant project, join a discussion.
That first step, that proactive curiosity, that might be the most valuable thing you can do right now.